Hey everybody, here's some info about week 12 that's going to be important for you. What we're going to do in this week is learn a little bit more about the details of financial validation. And the tool we're going to use for that is called a pro forma income statement. So you're going to need to watch this video, look at these slides. There's a template for you in Brightspace that is the income statement template. Every JCC student has access to Microsoft Office, so you have the ability to open Excel using that license. So go ahead and get that template open, and I'm going to show you a little bit about what you have to do to be able to understand this pro forma income statement and to be able to complete that. The idea of financial validation is letting us confirm that our solution idea is going to be financially sustainable. You've heard me say over and over again that our ideas for the final project need to have two characteristics. Number one, they need to be new and unique. They need to be unlike anything else that exists in the market today. The other thing is that they have to be financially sustainable. That means they have to bring in enough revenue to at least cover their costs. And how do we know if that's going to happen? We create a pro forma income statement to do that. Pro forma means looking into the future. It's an educated guess about what we think we'll have for our business in terms of revenue or money coming in and expenses. If you've taken Business 1510, financial accounting, or if you're somewhat familiar with accounting, or maybe even through Intro to Business, you've come across the idea of the income statement. So let me just clarify for you, there's a difference between revenues and expenses and income. Your revenue is just the money coming in, the expenses is the money coming out, which leaves you with a net income. That's what you'll find on the income statement. So more detail than about the income statement. In its simplest form, it is just revenue minus expenses equals income. Revenue is different from profit. Revenue is different from income. Revenue is only the money coming in. So whatever you're selling and customers are paying you for it, that's your revenue. Your expenses can be broken out into two different categories: costs of goods sold and operating expenses. If we're making a product, let's say we're making a plastic water bottle, our cost of goods sold would be the plastic and the physical inputs that go into making every single one of our water bottles. Our operating expenses are all of the other things that relate to running a business, like paying our rent and paying salaries and paying utilities, paying custodians to clean the facility. Those are all operating expenses. When we subtract our expenses from our income, when we subtract our expenses from our revenue, it leaves us with income. Hopefully positive, but oftentimes not, especially in the early stages of starting a new business. So what I'm showing you now is an expanded income statement. Starting with revenue, we subtract the cost of goods sold, and that gives you what's called a gross profit. From that gross profit, we subtract the operating expenses we just listed. That'll give us a net income before taxes, and as long as that net income is positive, you'll be paying some income tax. From that net income comes a federal income tax to leave you with a net income after taxes. Let's talk a little bit more about cost of goods sold. Cost of goods sold is something that a company can figure out after the fact. So they can look at the previous month or the previous year and determine their cost of goods sold using the formula listed here. Beginning inventory plus net purchases minus ending inventory. So in this example, we have a t-shirt business. On January 1st of a year, they have $5,000 in inventory. They have purchased $20,000 throughout the year while they continue to sell. And at the end of the year, they have $6,000 remaining in inventory. What is the cost of goods sold for that year? Go ahead and pause the video, use this formula to determine it, and see if you can come up with cost of goods sold. Hopefully, you were able to come up with $19,000. That's the beginning inventory of $5,000 plus the net purchases of $20,000 minus that ending inventory of $6,000. So this is useful for a business if it's looking in the past, but you don't have the opportunity to do that. You are looking forward and making educated guesses about the future. And you'll have to actually predict your cost of goods sold if you are creating a product for your business. To do that, usually you can find this online. You can find a cost of goods sold for almost every single type of industry just through most likely Google searches. If your industry is so new and so unique, you may not find this information available to you readily. And so what you can do is sum up, oops, I was trying to expand my viewable screen here. What you can sum up or add up are your ingredient costs, your inventory, any raw materials, and any labor that's directly associated with producing your product, and calculate your own cost of goods sold. If we're looking at something along the lines of a bakery and we're making cupcakes. So if we're selling our gourmet cupcakes for $4 each, the cost to make it would be about 30% of that selling price, or $1.20. We would add up all the flour, sugar, eggs, cream, all the ingredients associated with making our cupcakes, and look at those totals as a percentage of our selling price. So you probably don't have to manually calculate your cost of goods sold. You can most likely find it as a percentage just by looking up some information on the internet. Your operating expenses then that will be in your income statement are all of the other expenses other than your cost of goods sold. So anything else you're spending money on is going to be an operating expense. Generally, we have two categories: selling expenses and a catch-all category of general expenses. So we'll see examples of operating expenses at JCC, like paying for the electric bill, the fees for snow removal on campus, salaries for financial aid staff, custodial staff. These types of things are general expenses at the college. So what you'll do is complete the income statement template. And I've provided that for you in Excel. I will show you exactly how that works in just a second, but this is an image of what that template looks like. Working toward, again, your final project. Now, the final project intentionally does not include anything about the income statement beyond what you have on your lean canvas. In your lean canvas, you looked at your revenue streams, that's the money coming in, and you looked at your cost structures, the money going out. We're just taking that high level view of your financials and adding a little bit more detail for the assignment this week. This week does not build into the final project, but going forward, everything else that we will be doing contributes to that project. And we're nearly there. We nearly have everything done. So let me open up for you the income statement template, and I'll just show you how it's going to work. You'll have to do some calculations with regard to your gross sales or your revenue. So let's just say you determined that you're going to bring in $20,000 per month based on your sales. You'll have an opportunity to explain to me how you come up with that number, but for the sake of showing you how this spreadsheet works, I'm just going to make some guesses. Maybe you'll allow for some folks to make returns of whatever it is that you sold to them. For your cost of goods sold, make sure that you enter this as a percentage. So let's say you found, in our bakery example, that cost of goods sold is 30%. You're just going to put it in as a percentage, not 0.3, but leaving it as the whole number percentage. And that will help you determine your gross profit. So see, already with very little input into the spreadsheet, I added in my sales, I did account for some returns, and I put in a figure for cost of goods sold. It's already telling me my gross profit. Again, these are just estimates. I'm just guessing. From here, if you think back to that income statement that I showed you on the slides, now we take out our operating expenses. This template is to help you think about different types of operating expenses you may have. I want you to do a little bit of research, like maybe I do need to spend $500 a month advertising. What can I buy for that? Maybe I plan to have some contract labor, which means I don't have an employee on my payroll, but I do need to pay somebody to do a few specific tasks, whether it's my bookkeeping or manufacturing type tasks and assembly. So add in some numbers for your labor, and all of the other things. Not everyone will have every single expense here. You may not have any uh, interest expenses if you're not taking out a loan, for example. If you're not hiring any workers, you may not have any payroll expenses. If you aren't renting an additional facility, you won't have rent. But many of you will have these expenses. So I want you to think about realistic, practical costs. It might take a little bit of internet research to figure out some estimates for the numbers that you can put in here. When you complete this, and I'm just going to quickly put in some random numbers to show you how this spreadsheet is automatically making these calculations, it gives me a net income or loss at the end of the spreadsheet in cell G, looks like G58. If this number is positive, it tells you that you have a positive net income, you've made money at the end of your, I think we're looking at monthly here. Yeah, this is a month. Let me just put in a giant number here to show you what it would look like if we weren't making money. We're going to have a little minus sign, so negative $3,526. That means we're actually operating in a loss in this month. That is sometimes the reality in brand new businesses and startups. They don't necessarily make money right out of the bat, right out of the gate. So you'll take a look at your income and determine if it's positive or negative, and make some sort of conclusion if you think that your business is going to be financially feasible or not. So let me show you in Brightspace what you have to do for this assignment. You'll complete the spreadsheet to the very best of your ability. I completely understand that you are making guesses and estimates, but you can still do some research to make sure your estimates are reasonable. You'll complete that spreadsheet using cost of goods sold if you're making a product. If you have a service business, you're exclusively providing a service. Service businesses don't actually have a cost of goods sold. They might have a cost of services or nothing at all. Go ahead and put in a very small percentage, maybe something around the neighborhood of 5%, just to account for some direct costs that you'll probably have associated with providing your service. And most importantly, you need to add some sort of written statement that tells me if you're making money, what's your net income or your net loss that comes straight from the spreadsheet, and tell me if you think this is going to be financially sustainable. If you do not provide any sort of written summary of your financials, then I'm not able to give you a grade. So make sure that you can actually understand and interpret the information that you're putting in your spreadsheet. Please get started early so you've got time to reach out if you need any help, and I will talk to you soon.